Good afternoon, my name is Jordan Lambert, market analyst at Jalatomo Management. Gold made big and wild swings yesterday, falling to 1380 before bouncing back all the way up to 1400, but eventually the market dropped, triggered by US Jobless Claims that were better than expected and private sector payrolls that were in line with estimates. After these figures, the market slid all the way down to 1365. The bears have now paused for breath as price currently trades around 1372. Volume may be thin today until the US Labour Department's non-farms at 1:30 British summertime, as investors and traders await the final comprehensive set of employment data before the Fed's decision of whether to taper or not to taper at their FOMC meeting on the 17th and 18th of September. Syria is still hanging over the markets like a black cloud, and it still has the potential to be a catalyst for gold, although it does seem that any US-led attack is a few weeks away still, given the G20's divide over the matter. Let's just take a look at the chart at the moment. So looking at the 4-hour chart, a double top has formed. Here is the neckline at 1373, and it was support, but it had potential to be support, but it didn't actually materialize into support, and price, because of the good US data yesterday, plummeted right through this level, and that is now testing it on the underside as resistance. But anyway, this double top has completed, so it does give a signal to short the market. Gold has been very volatile at the moment, so trying to short the market using this double top may be a little bit risky, but if you can get in at the right price, it does have the potential to deliver $60 of profit for any bears looking to short around now. $60 of profit is calculated by just measuring the depth of this pattern, which is around $60. So has the potential to produce a $60 profit over the course of the next week, but the timing is essential. If we zoom into the shorter time frame and the 15-minute chart, this yellow line is the neckline at 1373. As we can see, it fell through at first time without even bouncing, but now it's testing it on the underside here. So now we have seen a second test of this level, so it could mean that this level is providing good resistance now, and it could be the beginning of the next downward leg. So alternatively, you could just draw a Fibonacci level from the peak of yesterday right down to the low of the yesterday, and look for one of these fib levels to see if price finds resistance. But yeah, it's potentially a good time to short, but be aware the non-farms tonight, it could be very volatile, and if there's any shock surprises for the US, we could see gold shoot up. But if the non-farms are in line with expectations, it is likely that the Fed will begin to taper this September, and that could strengthen the dollar and weaken gold. Thank you very much for listening to me. I'll be with you again on Monday.